Hi there, this is Nishanth Reghunath welcoming you to a new section of study under my lessons for income tax. So in this section, we'll be starting off with the first head of taxable income. So from the previous video to the introduction of heads, we saw that we have 5 heads under which income is taxable for an assessee in India. Now from this section, we'll be getting into detail of those 5 heads, with the first head being dealt with in this part of the study. And the first head is income from salaries. Now before going into a detailed study of this salary income, let me give you a brief introduction of this whole head. What all are the important items that you need to know, important terminologies that you need to know, how is the whole head structured, etc, etc. And that you'll be learning in this video. So first and foremost, let me give you a basic breakup of this whole chapter. So in this breakup, as you see, there are 5 items, and these 5 items are the most important items of study for you guys when it comes to salary income. First and foremost, retirement benefits. Second comes allowances. Third, perquisites. Fourth, provident fund. And fifth, deductions. Now there's a possibility that you might have come across these terms before. Things like pension, gratuity, VRS and all, which are payments pertaining to the retirement of an employee. Yeah. Now they all come under retirement benefits. Now terms like house rent allowance, daily allowance, dearness allowance, travel allowance, conveyance allowance, they are certain items which fall under allowances. Things like a motor car provided by an employer to employee, accommodation provided by an employer to employee, various other facilities provided by an employer to employee, they all come under perquisites. Now provident fund, self-explanatory. There are various kinds of provident fund coming therein, but I'm pretty sure that you have heard of this term provident fund before. And finally deductions. Now that is something which might be new to you guys. So people who are new to salaries, new to income tax, new to this head might not have come across this term deductions. Now deductions generally mean a set of items provided by income tax to be used by the assessee as a means to reduce their taxable income. So it is a means by which assessee gets to have a sort of deduction, have a sort of reduction to the taxable income. Alright. So these items, the first 4 items are all additions. These 4 items are a set of various individual items which form taxable element of salary, whereas deductions form a set of items which are reducible elements. Got it? Yeah? So we'll be having in-depth analysis of all these items in our coming videos. Okay? So for now, this is the basic breakup of the most important items that you have to learn under salaries. Also, please do keep in mind there are a few miscellaneous items that I haven't mentioned in this breakup, but we will be learning them in the due course of progress with this chapter. Fine? Now, for every head, there will be a set of sections ranging from, say, section A to section B, which contains all the general provisions pertaining to that head. It's not necessary that all the sections applicable for a single head should fall under those sections, but then the general items of the whole head will fall under that range. So for salaries, the general provisions fall under sections 15 to 17. For house property, that is the second head, it falls from 22 to 27. For PGBP, it's from 28 to 44, and so on and so forth. But do keep in mind, it is not necessary that all the sections for salary will fall under this head. There might be sections outside 15 to 17 which we will have to study. Okay, but generally it's sections 15 to 17 which contains all the basic provisions for this head. Now that is all about the basic breakup, and here again it's the same breakup in the form of contents. So our study will be divided into 6, first being introduction, then all the 5 items that we saw previously in the breakup. So introduction to salary is this video. Alright, followed by which we have retirement benefits, allowances, perquisites, provident fund and deductions. So yes, that is pretty much a basic breakup that I wanted to give you for this whole study. Now let's head into the detailed learning of this chapter. In my video on how to approach each head, how to approach a head of income, I had mentioned that every head of income starts off with a section which tells you on what are the conditions that make an item of income taxable under that head. That is a head which tells you what are the conditions which make an income taxable in that head. That will form the first section of each of our head, right? Just like that, we have a section which tells you about the chargeability, the basis of charge of an income under the head salaries, and that is what we are going to learn first. Basis of charge under section 15 and certain basic elements. So, for an income to be taxed under salaries, following conditions should be satisfied. And the condition is there should be an employer-employee relationship between the party paying the salary and the party receiving the same. Okay, so the one who is paying should be an employer and the one who is receiving it should be an employee, and this should be made legal by way of an employment agreement. So that is what is meant by employer-employee relationship. Now, Income Tax Act says this relationship shall be present, past or future. By present, what it means is the employer-employer relationship exists in the previous year in which the salary is being paid. So let's take our previous year 2019-20. There is a payment of salary from one party to another, and there exists a relationship of employer-employee between them in that previous year. Okay. Now, past relationship. Past relationship refers to a situation where the relationship of employer-employee does not exist in the previous year in which the payment is being received, but this relationship existed sometime in past. So say party A and party B were an employer-employee relationship in the previous year 2015-16, but a payment which relates to this relationship was received in 2019 when they were no more in this relationship. So the relationship pertains to a period which is in the past, but payment is received in this current previous year. So employer-employer relationship existed in 2015-16, but not in 2019-20 when the payment was received. This is past relationship. Now future relationship is the straight opposite. Future relationship is where a payment is made in advance. A payment is made by an employer to an employee in advance before they are actually becoming employer-employee. Okay. Straight opposite of past relationship. So for present relationship, it's salary. For past relationship, it's arrear salary, which we mentioned in our example. Any payment pertaining to a relationship which existed in 15-16 received in 19-20. So in 19-20, whatever received for 15-16 was for an arrear. Right? Now, future relationship is something that we receive in advance, and that is advance salary. So, understood about employer-employer relationship and the types of employer-employer relationships? Now, that's it about the basic element for an item of income under salaries. All that is required is an employer-employer relationship and a payment which arises out of that relationship. Now, the basis of charge under section 15 says that salary shall be taxable the time of due or receipt, whichever is earlier. Super important. Salary will be taxable at the time of due or receipt, whichever is earlier. Okay, understood? Now that is the basis of charge for salary under section 15. Now there is one more crucial thing that you need to know, that is the place of accrual of salary. That is, where is a salary deemed to be accrued. So place of accrual is generally the place where the service is rendered, not where the payment is received. So the place where the activity is rendered for which the salary is received is the place of accrual. The place of accrual of salary is the place where the employee performs his duties. So that is the general rule for finding the place of accrual wherever the employee works. But for a certain specific scenario, there is a slight alteration. the place of accrual will not be found by understanding where the employee is working. It will be on a different basis, and that case is where the Indian government sends an Indian citizen to work outside our country. So say the Indian government asks Mr. A to go work in the US for Indian government. So if you look at the place where the employee is working, it is the US. Right? And based on what I just said, the place of accrual of salary is supposed to be US, the place where the employee is working. But that's not the case. Because the reason why our government sent Mr. A to US is not for the benefit of USA. It's for the benefit of India, right? So if you look at it this angle, wherein Mr. A is sent by our government to USA to render services for our country, not for USA, then the place wherein his services are rendered is India, not USA. Got it? But if it's a private establishment that is sending, say, let's take for example KPMG sends an employee in their Indian office to USA, and he's deputed there, he's posted there, then it's definitely for the benefit of KPMG USA, not for KPMG India. Our government or our income tax department is not receiving any benefit out of that party being employed in KPMG USA, right? But in this case where the government is sending the employee, the benefit is solely for our country, not for the American country, right? And in that case, the place of accrual shall be our country, not USA. Fine? Understood? So that is all about place of accrual when it comes to salary income. Now I'll give you a quick bird's eye view into the computation format of income from salaries, and we'll close this video. So let's go to that computation format. So yes, here is the computation format for income under the head salaries. So I'll start off with the heading. Pay close attention to the heading on how it's structured. Computation of income under the head salaries of Mr. or Miss so and so for the assessment year 2021. So see how it's arranged. Computation of income under the head salaries. First we mentioned what is the head. Then we mentioned who the assessee is. Then we mentioned the period. So there is a structured order there, wherein we first mentioned what the head is. Then we mentioned who the assessee is. Then we mentioned which is the period, which is the assessment year. That should be your standard structure of heading for any kind of income head. Alright? Understood? Fine. Now let's get to the table wherein we'll be breaking up all the items under salaries. So in this breakup, you will see items that I had mentioned in the basic breakup of the head. Things like retirement benefits, allowances, perquisites, and deductions which fall last. See, deductions. Alright. Now besides these items, there are few other items as well. The first grouping of basic pay to fees, then this grouping and this grouping. So 1, 2 and 3. These groupings I hadn't mentioned, but then they are super simple to learn. Not as difficult as retirement benefits, allowances or perquisites. They are individual small items, nothing much to understand. They are very easy, straightforward items. Hence I didn't mention them in the basic breakup of the head. As I had said, in the basic breakup, I'm only mentioning the most important items. Alright. So we have these 5 items which are pretty straightforward, individual items. Then we have a grouping of items under retirement benefits, wherein we'll be learning about things like pension, retrenchment compensation, VRS, etc. and their eligible exemptions. Similar structure for allowances, individual items and their exemptions. Then comes perquisites with no exemptions. Then 2 groupings of items which I have made. These are not groupings as per Income Tax Act guidelines, but are groupings as per my guidelines, so that it will be simple for you guys to study. Now after these 2 groupings, we total it and find gross salary, from which we'll be deducting 3 items in the form of deductions under section 16 and find our taxable salary. This is our format for computing salary income. I'll be uploading notes please take it down. See you in the next video.